Hello, everyone, and welcome. If you're learning a few things from these episodes, make sure you like, share, and subscribe, which keeps us motivated to bring to you the latest from the Indian stock markets, from the cryptocurrency world, as well as international business. Well, in today's episode, we'll be talking about the action of Nifty 50 along with a couple of mid cap and small cap stocks which you can enter right now, and you can target around 15 to 20% of a profit if it goes well for you. So in this episode, let's talk about Nifty to begin with. Nifty today has ended above 15,300 and it is very close to its all-time high. It is just 150 points away from its all-time high, which was reached just a 3 to 4 months ago, right? And now we are very keen to see the new all-time high being formed in the coming sessions, that is in this week itself if it happens, or it can also face a very strong resistance at 15,400. Well, with that being said, let's move ahead and talk about the two stock picks for this particular week, and they are looking excellent on the chart. So let's straight away go on the charts, and this is the chart of the stock of pre-cam, and here we can see that the level of around 50 has been intact since a very long time now. Now, this level of 50 has been intact since December 2020. All right. So, December 2020 till this point is a very long time. In fact, if you can also date it back and go further back into this stock, we can also find out that since 2019, the level of 50 has not been broken, not even once, until it was broken a couple of weeks ago. So this is a very interesting breakout, and this level of 50 was not broken since October 2019, we can say. Obviously, it has been tested more since December 2020, but October 2019 is the exact time when we did not, after which we did not see a breakout of the level of 50. All right. Now, if we understand what is happening recently, is that the price broke the level of 50 on 18th of May, 19th of May to be specific. All right. And after 19th of May, it made a high of 65. It made a high of 65, and you'll be surprised to know that the price currently stands at 55. So after 65, it has come down to 55, and the breakout level was at 50, somewhere around 50. All right. So what should the traders do currently in this stock? The price is very much overextended from its EMA 21 and EMA 55 as well. So both the moving averages are showing a overextension from its median, from its average, and that is the reason why we feel that we need to test the current price with the help of a Fibonacci retracement. Fibonacci retracements are used whenever there is a huge surge in price and whenever there is a big impulsive move. We can to some extent find out till what levels the price can come down after the impulsive wave is over. So if we use the impulsive wave factor and understand the Fibonacci levels, we see that the 50% golden ratio, the 50% which is the golden ratio of the Fibonacci sequence, comes at 55. All right, after marking the impulsive wave, it comes at 55, and 55 is exactly where the current price is today. So this is a great confluence that we are seeing the current price at 55. Also the 50% Fibonacci level, it is also on 55. Hence, we can come to the conclusion that you can enter at the current price here in this stock of pre-cam. You can enter at the current price, but that does not mean that you should enter whenever the market opens tomorrow or in the coming sessions. You have to also analyze it at the live condition. I mean, you should enter when you see some kind of a sideways move from here on, or you see some kind of upward move. When I say a sideways move or an upward move, it is not like you should buy when the stock moves really up. It is just that hint which the price gives you, and it tells you that it is in the mood to like end the downfall from 65 to 55. It is in the mood to end that particular bearish move, and it is in the mood to just move sideways and form a support at some kind of a price, and it is preparing to go up. Or if it inches up immediately, then it is a very good thing, and that convinces you to enter that stock then and there itself. So just make these studies at your end when you are actually entering this stock, which will be really really helpful to identify a good entry point. Never enter a stock when it is on the downfall, like it is coming from 65 to 55, right? But we don't know what level it is going to stop. We don't know whether it is going to stop at 50 or it is going to stop at 52 or 53. All right, so let it form its support, let it form its base, and then when it moves sideways and if it moves upwards, then you can have a good picture with utmost clarity, and then you can enter, right? So this is the idea here in pre-can, that you can enter at the current price given that you take care of the current time situations. And what is the target? The target here is 65, because 65 is where the earlier swing high lies, right? The earlier swing high lies at 65. That is your target, and you can place your stop loss near about 50. Now, why should you place your stop loss at 50? Because 50 is the level which has been broken out after almost 2 years. It has been broken out almost after 2 years. So if the price will not, I mean, the least probability is that the price will break down the level of 50, and it will go down below 50. So 50 is your stop loss, 65 is your target, and your entry is around 56, 56.5, 57. That level will be your entry. But you should also make sure that you follow the 2:1 risk reward ratio principle. The risk reward ratio principle is very important when you're marking your targets and your stop losses. So you can adjust all these studies with the 2:1 ratio and do the mathematical calculations at your end. All right. Now the next stock which we'll be discussing is NCC. NCC is a mid cap stock. It is not a small cap stock. And if we talk about levels here in NCC, the level of 95 is the most prominent level in this stock of NCC, and the current price here in NCC is 87.9. So you can round it off to 88. All right, so the current price is 88, and 95 is where the price is inching forward. The price had reached 95 here in the month of March this same year, after which it kept on falling down and it made a rounding bottom kind of a formation, and the base was established at 72. So from 95 it fell in the bearish direction till 72, and after 72, after making that rounding bottom formation, it is up today at 88, and it is making its way towards 95. And here if I just tell you a pattern that is being formed here, it is a handle and cup, or a cup and handle formation, which tells us that this is a very eminent continuation chart pattern, which gives us more clarity that the price of 95 is going to be attained in the very very near future. All right, so 88 is the current price, and considering the bullish move that the price is seeing and the very slight sideways movement that we have already seen, I think you can enter this stock as well on the current price, provided that when you're buying it, you have to do a small study at your end as well. Don't buy if it's a big gap down or it's looking really bearish. Enter if it's looking sideways or slightly up. So enter at the current price, and 95 here is your target, and this is a very very good target, and you can always keep a risk reward ratio of 2:1 and keep your stop loss, which is very very important. 72, which is the base of this particular rounding bottom, cannot be your stop loss. All right, so technically we are not able to find out a very valid stop loss over here, though I think around 84 or there on or somewhere there can be a good stop loss, because there is some resistance and support activity there at that level of 84, as the charts tell us in the daily time frame. But you can analyze it further. and enter at the current price, and 95 is your target in this stock of NCC, which is showing a great movement and completing its handle and cup formation, and it is a breakout after a very long time. So at least till 95 it will go. It can also break out the level of 95 and go upwards. Why I think it will do so? Because, well, that is another study, that can be your target number 2 to move on. But why I think it can do so? Because the price has been doing the same thing, like it has been moving up, it has been breaking out, and then it has been moving sideways. This happened in December 2020 as well. December 2020 till Feb 2021, the same thing happened. And in Feb 2021, this big breakout occurred, where the price moved from around 60 to 95, 96. And since then, the price has been moving sideways again, and a box pattern has been formed again. After February 2021, we see the price moving sideways now, and we are approaching June 2021. So this is the pattern, and hence it is expected that 95 will be broken as well, and the price will make another high over here. And this process of making higher highs and higher lows can continue in the stock of NCC. Well, this is the analysis of these two stocks, one in the mid cap space and another one in the small cap space, and both of them looking good to buy at the current price, provided you adhere to all your other aspects, like your risk appetites, your position sizing, your trading psychologies, trading setups, your trading experience. Everything else should match with each other, and with this technical study of price action, which will help you make good profits in these trades. So thank you for giving your valuable time and listening to this particular episode till the very end. I hope this was valuable for you. If it was, make sure that you follow, share, subscribe, comment, and be a part of this family. Thank you for giving your valuable time, and I'll be seeing you again. Thank you.